everyone, welcome to Mark's Finance and Fitness. Today I want to start a series called the Sector Series. What this is I want to go over stocks that I own in each sector of the market, but one sector at a time, because I think sometimes YouTubers go over way too much in one single video or go over too little. So I want this to be focused, but also have enough information that you enjoy the whole video. So in this series, we are going to focus on the technology sector. Now I own three stocks in this sector. That's Microsoft, IBM, and Cisco. So we're going to go over all three of these stocks, how they're doing in my portfolio, some analysis on them and opinions, and just put it all out there. And so I think this will be very fun, very interesting, and that way you can, go to the sector video that you want to look at what I'm invested in, and I think it'd be very beneficial and very different from what other YouTubers do. And so with that said, let's get started. I thought it'd be interesting first to go over how my portfolio has been doing. And so I found this chart that I was able to compare my portfolio versus the S&P 500 for 1 year performance as of August 31st, 2021. To my surprise, I'm actually beating the S&P 500 very slightly, but that is something that is extremely hard to do. And I am super proud of this. I think, I put a lot of effort and energy into my investing, and so I'm very happy to see this. Now, I don't expect, me to stay above the S&P 500. Of course, that's a goal, I think, of all investors. But for now, I'm beating it slightly, so I think I can keep on putting updates to see how I'm doing against the broad market in the S&P 500. And the next I want to share is, of course, dividends. How fun is that to share dividends? Most people have been so interested in dividend investing in the past couple years, something that I focus on mainly in my portfolio. I have some growth stocks, but I want to show you. September of 2021, we're about halfway through the month, and I'm about halfway to my goal. My goal is to get over $100 in dividends this month. Right now I'm at $51.64. I'm on track to get over 100, so we will see how this ends up, and I will share that with you. But I want to show you, life to date, the 2 years that I've been investing, I have now received $800 in dividends. This is the power of dividend investing, creating that passive income and just really growing that income by reinvesting your dividends and growing those over and over and over. So far, if you look at the year 2020 versus year 2021, I'm on track to hopefully double what I made last year. So let's dive right in and let's get into the first stock, and that is going to be Microsoft. Now, I really wanted to do something fun here. I live in Albuquerque, and maybe a lot of people don't know this, maybe you do, but Microsoft had its beginnings in Albuquerque, New Mexico. Here's a picture of the first building that they ran their business out of. Of course, they started in a garage in Albuquerque, New Mexico, but in 1975, they also moved it to a building. Now, unfortunately, 3 years later, they ended up moving to Washington. They had some trouble here in New Mexico getting some financing. The banks didn't really believe in their model, which proved to be very wrong. And it looked like they had trouble finding some employees. So I just thought this was something interesting to share, that Microsoft started out in my hometown of Albuquerque, New Mexico. Now, let's get going and let's look at some Microsoft analysis. First, we're going to look at the equity rating of Microsoft. Right now, analysis have it at an 8.6. So very bullish on the very high end side, and I'd say this is a normal for Microsoft. As long as I've been investing in it, it's been around this in the 8 to 9 range the whole time, and it definitely deserves that. We're going to look at next its 1 year chart. You can see here that it has skyrocketed over the last year. And most tech stocks have. There's, especially the big stocks like Apple, Google, Amazon, they've all gone up really, really dramatically. And so a lot of people are saying that, they're very overvalued right now. But you're going to see here in this next chart, the analysis says actually Microsoft is undervalued. These are fundamental analysis scores. So you can see there the first one saying that it's actually undervalued. Not heavily undervalued, but slightly. The quality of Microsoft, they deem to be, it's in the mid-range, but it's more towards high than low. Its growth is where Microsoft shines, 93 points towards the very high end. Of course, Microsoft heavily, gets a lot of its revenue from subscriptions. That is a gold mine for companies if they're able to do that successfully. Their financial wealth is a 61, and so, they're definitely on the high end of that. But I think overall, Microsoft is a huge, huge potential, you know, growth company for a very long time. Now, I want to say that Microsoft is mainly a software company, and they're in lines of business like the cloud with Azure. They are into gaming with Xbox, so they have a lot of products, a lot of growth potential. And keep in mind, big companies always have things that they're lining up for future launches. And so I guarantee you, Apple, Microsoft, Google, Amazon, they might seem overvalued now, but that's because they're not factoring in those future pipeline things that they're working on, because they're not actually launched yet. And so these companies, I feel, still have huge potential growth. So with Microsoft, I also want to share how it's doing in my portfolio. So right now, Microsoft is the biggest of all my tech companies. It's grown by 48%. I have the most money in it, and I think its market value is about 2,500 bucks in my portfolio. But I've had a gain of almost $1,000 with this company, and I will definitely keep adding to Microsoft, especially on any dips. So with that said, I think Microsoft has a high of like $400, a low of $275. It's around $295 right now. So I'm probably gonna buy a couple shares, or at least one next paycheck, regardless of where it's at, because Microsoft is one I feel you can always add to, and it's just, a year from that point, you're gonna make a decent gain on that purchase. So the next stock that I want to go into is Cisco. Now, Microsoft is more software. Cisco is more equipment based. So they manufacture and sell internet-based networking and other products related to communications and information technology. Now, Cisco, they have a rating on their equity score of 9.4. So you'll notice it's a lot higher than Microsoft. This company actually, across the board, has very high ratings. So Cisco, if we look at their analysis, their fundamental analysis, they are considered more undervalued than Microsoft. Their quality is high, their growth is high, and their financial health is high. So on an analysis kind of look into this company, they have very high scoring across the board. This really makes me excited to be an owner of it. And Cisco, if we look at their chart, they've had healthy growth as well. They've had a little bit of pullback the last month, but overall they've had very healthy growth. I think there's a lot of bullish thesis on this company, which I encourage you to look up, because Cisco is one that I'm also going to be adding to from my next paycheck. And right now, Cisco in my portfolio is also killing it. It's grown 44.66%. It's gained me $333, so I have a lot less invested in it. It's in a distant second in my portfolio as far as money I've put in. But I really want to start making this position a lot more. I think due to all this analysis that I've looked up, the company, it's very solid and it's very sturdy. And I think in the future, this company will prove to have been a good investment. So lastly, I want to go over IBM. Now, IBM has an interesting kind of twist to it. They are going to be splitting their company off into a new company. I think it started like Kyndryl, I forget the name of it, but it's going to be a new company that focuses more on the infrastructure side, where IBM will now be focused on more the cloud AI type of side of things. I think this is why I'm holding on to IBM, because you'll see in a minute it doesn't have as high as ratings, but I think the potential for this company, when it splits, if it plays its cards right, I think this can be a beast of a stock growth, especially, the IBM cloud AI side of things. And then to have this new company that is more of the infrastructure services side of things will just be an added bonus. So IBM, so Microsoft is software, Cisco is more equipment, and IBM is more of like an IT services company. So I think I have a good mix between the three stocks that I own in the technology sector. Let's look at IBM's chart first. IBM has not been as, it's been a lot more rocky than Cisco and Microsoft. Here we see the 1-year chart. It's kind of up and down and up and down and up and down. So not that steady growth that we see with the other two companies. And its equity rating is a lot lower at 5.9. And so that's kind of, I think, due to it being such a big company who's had a lot of, slow growth, and people consider it a dinosaur of a company. Sometimes a dinosaur company can be good if it's reinventing itself, but I think it's had some struggles. But that's why I'm very interested in that split. I think it's going to turn things around for this company. Now, IBM's analysis is very interesting. They have some very high ratings, but one really low rating, as I just mentioned. So it's considered very undervalued. It's considered a high quality company. I think that's because it's so sturdy. It's a big company, and it's just a sturdy company. Now, its growth is extremely low in this analysis. I mean, that's pretty much as low as you can go. And I don't think this is really considering the split that's coming up. So that's where this company kind of lacks, though, is its growth. You saw that chart, and if I even went out further, it's not been a good investment over the last, long term. And so I think what I'm hoping for is, because also you'll see the financial health is very high. So it's got everything set up except for that growth. If that growth can turn around, this company will skyrocket. That's what I'm betting my buck on. And so with this split, I am hoping that growth and stability moves up a lot higher and they turn things around. And if that happens, it's positioned in all other areas to really take off. And so that's where I hold on to IBM. Now, in my portfolio, it's only grown 13.5%. It's the company that I have the least money invested in out of the three, but it's not too far behind Cisco. But big difference, right? In the mid 40% growth for the other two companies, this is 13.5. And so I will keep it in third place, but I also will be adding to it as well, because I feel if there's that big turnaround and the growth projections change, this company will take off. And so that's where I stand with my stocks in the tech sector. Is Microsoft will always be number one in my portfolio. And then Cisco I want to bring from a distant second to a closer second, and IBM I think will always stay a distant third until they split and maybe show some changes in growth. Then I'd invest heavily in it. I think that, I have some other accounts where I have some index funds that definitely, right, if you have, most index funds are going to have like Apple, Microsoft, Google, Amazon, and probably the top 10. So I would like to add Apple. I would like to wait though and see if they have any type of dip. Their stock's kind of cyclical based on the release of their products. So that's one I'd like to add. The other one that I'm interested in adding is Amazon. I think they're undervalued and they have huge potential. So I'm really, it's hard because my index funds have these in their top 10, in other accounts I have, but I mean, they're all beasts of a company. They all are gonna, in my opinion, just prove to continue to have that high growth. So I think I might make some additions there. But right now, I think I have a good mix between Microsoft, Cisco, and IBM. IBM could be a turnaround play. Cisco, I think, will be a steady grower. And Microsoft will, I think, continue to kill it in the market and as a company. So there you have it. There's the sector analysis on the technology stocks I have in the technology sector. I hope you like this type of video. And I'll keep on going through the sectors in future videos till we finish all the sectors I'm in. And let me know what you think about my holdings in the tech sector. Do I have too little companies? Should I have more tech companies? Do I have the wrong companies? Do I have the right companies? What are your opinions? I'd like to hear them. And thank you for watching here on Mark's Finance and Fitness. And I hope you guys have a great day, and we'll see you next time.